Good morning, traders. Paul here with GammaEdge. Today is Friday, the 31st of March. End of week, end of month, end of quarter. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. So the summary for today, we have what's called a CT, a cumulative tick continuation up day. And what this means effectively is that the bull leg is intact for today. Some guidance here on upside targets, sizing criteria for the position, what we have seen as an average drawdown, as well as a worst case right tail drawdown. This is measured on the open to close. Overall, though, we are rallying within a overall downtrending market. We will note that the cumulative tick as measured by the ARCX, which we call the quality tick, is transitioning up. You'll see that on the next slide. The rest of the cumulative tick indicators that we watch are still very early. You're not late to the game. I would not worry about necessarily, chasing this. I would wait for some confirmation after day. We have a large amount of contracts that are rolling off today, and next week could be very interesting. Market breadth is viewed by our 52-week new high, new low indicator. We are still showing a continuation of the downward trend where we're pounding more stocks to the low side than we are the high side. This is not constructive for the bulls. This is showing underlying weakness throughout the market. We're unable to get above this. We would really like to see this advance to a 52-week new high, outpacing the new lows to have any confidence in a long-term type of scenario. We have had a change in the left and right goalposts. Part of this is influenced by the JPM hedge, which is rolling today. And part of it is just short-term 0 DTE actions. So instead of the 3,800, 4,200, which is what we've been seeing, we're now watching the 4065 and the 4100. We'll talk a little bit more about this here. Downside line in the sand transition is sitting right around 4,000 up to 4020. If we break through this level to the downside, we would become quite bearish very quickly. As long as we stay above this, we are buyers of the market. But today is, like I said, a little bit tenuous, so be very careful. 4065 is in play for today. If we move above this, charm will anchor us and tend to pull us down, and will be somewhat offset by positive flows that exist at 4070 and 4075. Those are major call-dominated gamma levels for today in the 0 DTE, with 4075 being the primary expiry for call-dominated gamma today. Positive charm environment, under 4065, it gets a little tenuous above 4065 up to 4075. So we'll have to watch and see what happens there. 0 DTE traders, be aware of the following levels. Play your longs or shorts accordingly off the levels. I did add some indications, just requests from one of our users. The dominant strikes are shown for the call side, or positive impact. 4,000 is going to be very, very constructive, for instance. 4065 is going to be an upward resistance ceiling until we cross over it. If we do cross over it, and then that'll start flipping and putting these other levels into play. We are seeing some minor, this 4015 and that 4020 are kind of playing together here today, so just be aware of that. SPY, Qs, and IWM are indicated. Taking a look at the cumulative tick model, this is the composite view. So we got the longer term, what we call the ribbon. It is still trending down, but you can see we've crossed above as of yesterday, or 2 days ago, excuse me, and then yesterday was a continuation. And so we would continue this upward, or have the expectation of continuing this upward. We're in what we call a railroad track up pattern. You can see that that helps you stay in the trade. Once you get in the trade here, you can see you can continue to ride that. The crossing here would be an indication to go long. The continuation is a good signal. This is extensively back tested. Has very, very good risk-reward behaviors that I showed on the previous slide, and I would go ahead and take a look at this and paper trade it accordingly. Want to spend a little bit of time about the JPM hedging and the contract sizes. This is the current status of the market for the JPM trades. We gave a member only seminar 2 nights ago, and these are some slides from that. We do publish this from time to time. So today is where we have the expiry. These are obviously worthless. The value has been captured and was used to offset a long time ago the hedging requirements. There's been some discussion this morning on FinTwit that the dealers want to do this and that. They don't care. They don't care. This was done back in December, and it was hedged out at that time from a dealer perspective. They don't care. JPM, on the other hand, will be playing the role here. And what will happen here, this was as of a couple nights ago, as long as we stay below the 4065, now this is in isolation. This doesn't take in any of the other structure across the OI surface. This is just taking a look at the Fund 1 structure. But as long as we stay below the 4065, we're going to collapse towards zero in terms of overall deltas. And what that means, that's positive charm flow. And with positive charm flow, that will basically make the dealers losing deltas, and they will have to buy, which becomes the underside pinning mechanism that we see here. On the flip side, if we move across this, and remember, there's a surface of open interest here. There's a surface that is modulated today by the 0DT action, and because of that, we could very easily break above this. If we do break above it, as we move through the day, the charm flows will flip, and that's why you see this transition. And what will happen is now we'll start pinning towards the -1 times 40,000 contracts or so. So what that means for all of us is that now the dealers are getting longer, and as a result, the dealers will start to sell. And in isolation, that will become the upside pinning mechanism. That's how pinning works. It's that simple. Now, there's a surface out there of OI, and as I just went through, there's a 4070, a 4075, large gamma expiry. That all changes the picture. This is a model, right, of just 3 strikes, but now we have all of the strikes out there, and that's what the gamma charts are, and everything that we make available to you guys shows. So just understanding the individual behavior will help you appreciate how we pin and what could happen. And at GammaEdge, we stay in this if-then sequencing. So if we are below, we expect charm flows to be what they are. If we are above, we expect charm flows to be what they are, and then act accordingly, but we do it in context of the larger surface. We created this presentation just so that people have the basics of what happens with these 3 strikes and when we're close to one of these short call strikes. So let's talk a little bit about the gamma. So from the PM settled complex, we're in really good shape in terms of a bull structure. So we are in a call dominated environment, fairly significant level to the upside here. This is good, right? Above the yellow line, which is the right now line, these are out of the money call speculators, and you can see it's a sea of green, and they are dominating the in the money put speculators. Now think about that in context of delta, right? So the deltas of the calls are less than 0.5, and because the puts are in the money, their deltas are greater than 0.5 absolute value, right? Minus 0.5 and larger. So we are offsetting deltas, and we're seeing a sea of green. That's a good thing, right? That's bullish. To the downside, we have in the money calls, so their deltas are greater than 0.5, and even though we have puts indicated here, those puts have a delta of less than minus 0.5, and so when we net those together, we still have net dominance on the in the money calls. This too is constructive for the bulls. And so when we look at the structure from a PM settled complex, this is what trades on the 0 and 1 DTEs, very liquid. We have a very good structure. Now sticking out like a sore thumb, obviously, is the JPM. This is dominant for today, 4065 here, 4100 here. So these are the 2 strikes that are in play. Clearly, and you can see that 4075. Now, why does the 4075 matter? So if we take a look and we look at just the 0 DTE, so we're looking at isolating just what happens today. Again, same very good structure below us. The in the money calls are present. One thing to be aware of, though, is that this is the 0 DTE. At at the end of the day, this is what's coming off. And when you have a large amount of your foundation coming off, it has to get replaced somehow. It's either going to get, the puts that are vaporizing today will be in direct proportion or not. But this is telling us that the deltas are in greater proportion of coming off, the call deltas. And that could be weakening under our toes into the weekend. So just be aware of that. Now, to the upside, you can see a lot of put in the money puts are coming off. That's good for the bulls. We do have a mixed picture above us from that 40.50 all the way up to about 41.05, 41.10. We don't think there's any contribution from the 0 DTE above those levels, and we are mindful of some of these what we call nodes that exist right here at 4100 and 40.85. These could be parking spots into the weekend. We don't know. You don't know. But we will say there is, a possibility. Now, in terms of pinning, the 40.65 and 40.75s could actually be a very good area to pin. Why? Because first of all, the JPM hasn't been neutralized. We said this yesterday that we thought perhaps with the action we saw yesterday that this would be neutralized. It's still present, and it's still very present, as you can see. So this becomes a natural pinning area for overnight for the reasons I just described on the previous slide. So we are mindful of that. Overall today, look at this though. We have a net positive expiry, and when we have a net positive expiry, despite the SPX being cash settled, that can put downward pressure on the markets. So just be aware the SPY, the Qs, and the IWM, which are all equity settled, could be coming off, and that could put some downward pressure. When we take a look at the 1 DTE, which is Monday, right? So now we're bridging the weekend. We're looking into our crystal ball into Monday. You can see that the 4100 is a clear upside, 3950 clear downside, transition indicated right here at 4000 to 4020. This is a common theme, just so pay attention to this transition area. A break of the transition to the downside would be bearish. I will note though, Monday, as of this morning, is pretty weak, and when we have a weak expiry, it's really hard to tease out what's happening. Now contrast that, I didn't really talk about this, let me make sure. On the 0 DTE, this is a large number. This is 1.3 million contracts coming off. Compare that to Monday, 161,000, right? So roughly 1/10 is coming off on Monday, and it's because today on the 0 DTE we have the end of week, end of month, and end of quarter expiration, excuse me. So with all this said, what does this mean? You can see the dominant gamma levels for Monday, and you can see kind of where we've got some support all the way on down to the top of transition. If we get into transition, we're mindful of the growth of this particular area, and if we lose transition, this could become a downside accelerant, so be mindful of that. Excuse me. Taking a look at the combo complex, which is the AM and the PMs. First of all, draw your eye over here. We are dominated on the call side. This is a change from where we started the week, and this has been kind of the way things work. We start the week, and then we go into the latter part of the week fairly strong, and this is no exception here. Again, take a look up here. We got a node up here at 41.55. We don't see any chance of moving up there in the combo. We got a lot to push through, and don't think that's going to happen. 4100 is the lower plus GEX level. This has come down quite a bit. You can still see 42 is very much in play, and you'll see this will be a little more evident on the next slide. But this is very solid for the bulls. We've got this call dominated out of the money structure here, which means speculators are out in force. That alone is a good thing for us, and it's short dated, and you can see that with the relatively high magnitude and gamma levels here. 4065 obviously will vaporize today. This is the JPM. Note that this is yet another reason of why we don't think put-call ratio is a good thing. We see a lot of people that rely on put-call ratio. It's absolutely crap. So just be aware of that. And then to the low side here, you can see that we're quite dominated as before. Put speculators are gone, even though there is obviously a lot of puts that are out there. Transition 4005, 4010, very clean levels here, sitting right above COI and POI, which has been at 4000 forever, almost a year, on and off. We are still watching this transition area of 39.15 to 39.25. It is a secondary transition, and if we fail this particular area, we do see this potentially growing. And as we get more into that area, we'll talk more about why we watch those things. So last slide here, 42 used to be the old plus GEX. 4100 is short term. You can see the 4075s and the 4050s right here, and you can see they're all in very close contention for taking plus GEX. It just so happens the 4100 is what people are targeting for upside convexity. So they've stacked their calls here, and it's very, very evident. 4010 is the upside transition level. Anything below that starts emboldening the bears, and then here's that lone 3920 area that we're watching to the downside. This is the JPM strike that will expire today. This is minus GEX. This is up from 3800 down here, and after this goes away, we think we're just going to fall back to 38, which is where we've been for a while. So, here's the takeaway. Here's the TLDR. You want to watch, and we want to continue to play. We'll play long above this. We may bounce off of this. It depends on where we are. Charm flows are supportive below this level. Once we get above this level, you can see there is going to be some sort of contention between the 4065 line and then all the way up here as we go into this 4075 line. So just be aware of that for today, and these will continue to grow. To the downside, we would be shorting the market below these levels here, and any pullback and bounce, we will probably play long here today. So hope that is helpful for everyone. So with that, I will bid you farewell. If you have any questions, comments, want to track this today, we'll be fairly active. GammaEdge.us, go there, fill out the blanks, and come on into the Discord for a 14-day free trial. No risk to you. All the tools turned on, and we got a great group of traders who are constantly doing really fun stuff. So just come in and watch. Twitter, GammaEdges with an S, of course, and then here on YouTube, smash the like button if you like today's content, and of course subscribe so you get notified when Taylor and myself, and often Michael, post our views of what we're seeing and how to play it. So with that, have a great Friday, have a great weekend, and hope to see everybody in the Discord.